it's a fun trip according to Faye, and yeah, I mean she keeps a brutal schedule. I don't see how she does it. Oh, I bet. Anyway.
Of course, you don't get to go to Florida and have fun.
This is true. Yeah, not yet.
It's
not
still
yet.
It's a little more
Not
brutal.
yet.
Thank you.
Yeah. Oh, I just stapled those together. So anyway, well,
So if you
where would you want me?
Yeah, if you would kind of come up here, then we could all see. And again, if you need any like support, if you need me to screen share anything, those of y'all online, if you check your email, you should have the PDF copy of the notes that we'll be looking at. They asked me to introduce our speaker today, Ed Lay, who she's known for 7 years, and as you can see in the handouts, it's got an impressive bio and is going to be speaking to an area that we all have to deal with. Sometimes we feel like we have to, at least for me, sometimes I feel like I have to deal with it once a year and it's very stressful, but I'm sure we're going to be getting some incredible insight into the process, and that's going to help us from here on out. So. With that, let's all welcome Ed.
Oh, thank you, Chris. So where do you want me to stand?
Just if you could stand
Just
like
right here?
Yeah, right
Okay.
around
And
here.
this truly is interactive. So I have bribes.
Oh,
Well, now, I'm sure you all have bribed students in the past.
Oh, no. Yeah.
No.
Yes, all the time. All the time.
But anyway, so a little tip of the hat to healthy. This is Trader Joe's granola. It has chocolate chips in it. And then a little tip of the hat to not as healthy. So if you ask a question, you get a treat. How about that?
Love it.
Nice.
Oh,
You're our
one-
favorite speaker so far this year.
Welcome. All right. Well, you know, my kids think I'm old as dirt, and I probably am. I've been a CPA since 1983, so full disclosure. And I actually, my son's kind of followed me into the business. My daughter is way out in Austin, Texas, doing consulting with KPMG. I don't know if y'all have heard of that. It's an international organization. But anyway, that's just a little bit of a addition to my bio. I want to say thank you for all you all do in the community. I mean, you know, of course, Joy of Music has been around forever and ever. And you just make the community a better place by educating and sharing your talents. And so I really appreciate it. And sometimes, especially during tax season, you know, there's no better work environment than to put on, you know, Taco Bell's Canon and D or whatever to sort of soothe that tax season anxiety. So today, if you don't take away anything from this, I just have two salient points. One is half the battle is getting organized, and that is no fun. But you know yourself better than anyone, and I would just suggest you get a system that works for you, whether it be, once you get a receipt, let's just say you bought treats for your students, you can scan that or get an envelope and just stick it in that envelope. But that's half the battle. The other thing, and we'll go through the template on what you need to say. The other thing is two words, actually three words, from the IRS. It's called ordinary and necessary. Pretty vague, but that's the kind of the golden rule for legitimate deductions. So I have a question. Are most people here, I know your husband's your family tax guru.
Well, he does TurboTax.
Yeah, and I wouldn't attempt it without software. I really wouldn't. So do you all do self-prepare or? Okay, I'm seeing a yes from Chris.
Yes.
Yeah, and okay. Yeah.
Sorry, guys. I'm trying to see if there's any way to get that buzzing to stop. It's very loud. It's distracting.
Maybe the IRS has bugged this room. No.
Sorry, y'all.
It's, yeah, I'm not sure. Well,
Go.
Oh, okay,
Go ahead.
Chris.
Ask if anything else.
so anyway, organization and just kind of a thought process. There you, oh, let me, yeah, it just was very
It
temporary.
was Chris.
Well, at first I thought it might be that software in your leg. that you were
Oh.
Oh. Anyway, so I'm taking it you all don't engage a professional to do, okay. That's fine.
Sorry.
No, no. Oh, and Chris, the minute you left, it turned off.
I'm pretty sure it is the air conditioner, yeah.
Gotcha. Thank you. Thank you.
Thanks. Anyway, so what I thought we would do today is to, I'm assuming that when you do your tax return, you do a Schedule C. That's the self-employed business. It's my take on Schedule C, and there's several schedules attached to that, is that it is an expensive way to do business. So there's two taxes. You know, there's your regular income tax. I'm just going to throw out a number, let's say 15, 20%. But then on top of that, there's the self-employment tax at basically 15.3%. So in the eyes of the IRS, you're kind of equalizing your self-employment income with other structures, you know, a corporation. And so if you're a W-2, you have, you know, the employer, I call it FICA, and then the employee FICA. So that's how that 15.3% is paid. It's your self-employment tax. One other bit of, going back to the organization piece, let's say you've just had a horrible year and you've been, you know, sick, you've had a family member, and here it is, and obviously you would file an extension in April, no problem there, but it's coming up to like October 15th. Well, what do you do? So in the eyes of the IRS, it's okay to file an estimated return. You know, you can't do off the wall stuff, but that's acceptable. Then from that filing, let's just say your life comes back together. And so you have up to 3 years to file that return. Now, if you owe money, obviously you're going to owe a little interest and penalties, but don't panic because you don't have all your records together at tax filing time. The other thing, let's go back to that example. If you're, say you have a good reason to file late. We all probably played the game Monopoly when we were kids. Well, I still like it. And Jasara, hello. Welcome. So to make an analogy, in the eyes of the IRS, you get a get out of jail free card. So if something happens, let's just say you get stuck with a 25% penalty and your net income was $50,000. So that's a hefty penalty, you know, $12,500. But you can use your Monopoly get out of jail free card, and it's called a first-time abatement penalty. And that works. I've had to use it for clients. Now, what I would do if you do face those penalties, number one, I would save that abatement, first-time abatement, and if it's health related, that's your first default. Anyway, those are just some little clues. Have I totally confused you all on where we, sort of the tenets of this? Any questions? Yes,
Well, about that 3 year, you said you have 3 years, or you?
exactly.
That you can file an estimated return, you have up to 3 years to amend it or revise?
Exactly.
Because I remember one time I was suggesting that to somebody, but what if I don't have all of the information by October 15th? Could I just do the best I could and then change it later? And they were just horrified. No, you have to be absolutely accurate and everything. So that was interesting that you said that you can do that.
Yes. This is from the president of the AICPA, which is American Institute of CPAs. Estimate, but again, you can't be totally off the wall, but you have a good sense of your business.
But this abatement thing, I've never heard of that before. Do they not
Well,
advertise that?
they don't.
Because I've just saw it's a 25% penalty, so they don't advertise that.
Well, we need a CPA.
Well, this
Yep.
is assuming that you have tried to pay, you paid the tax, what you assume you're going to pay.
Mm-hmm.
It's just you were off.
Yeah, there's lots of reasons, but they don't advertise it. No.
You just have to ask for that then?
Well, it's a form. So everything in the realm of the IRS is a form, and but that's okay. Now, let me give you one other, and these are generic tips. We'll get into the meat and bones of it in a minute, or meat and potatoes. But let me tell you this, and I have used this resource. There is a taxpayer advocate service out of Nashville, and they are pretty responsive. They actually answer the phone. Now, they also go by forms. So one example, I have two cases before the taxpayer advocate. If you have tried to correct an issue with the IRS and there's no success, go to the taxpayer advocate. And what I would suggest is to just, say taxpayer advocate or IRS taxpayer advocate. And they do, that. Now it takes a while. The wheels of progress are rather slow. Yeah. But, they resolved, I know one has recently been resolved, and it was kind of a sad case because it was a recent death of a spouse. His widow, this was from 2020 tax return. You tried everything. The IRS wants to prevent identity theft. I fully understand that, but they apparently were thinking the surviving spouse was getting this refund illegitimately. It all worked out. So patience is another, there's organization and ordinary and necessary. Patience, I guess, is another adjective to describe working with the IRS. But anyway, well, why don't we get into, I want to be, actually, phone here. I want to be cognizant of the time. I think we're doing fine.
Absolutely.
Because Faye said that you get the hook after 45 minutes and
we don't need to worry about that.
all right, so let's go over in your handout the Schedule C that you all may be familiar with. And obviously, I'm assuming that you're, as an individual teacher, you would start this with your social security number. And most everyone in this room would be considered a cash basis taxpayer. So I'll give you an example of, cash versus accrual. So, and mostly it's corporate entities that do the accrual. But on the accrual basis, you maintain accounts receivable. So let's say you have a student's family that hasn't paid for lessons yet. I mean, they intend to, but that would be your accounts receivable. But in your case, you're a cash, most all individuals are cash basis taxpayer. So even though you have an outstanding balance with a family, you don't include that in your revenue. It's if you got payment from that family. So that's kind of the, here at the top line F. And most everything, 1099s, let's talk about that. Supposedly, if you have a helper in your teaching practice and they get over $600, you're supposed to issue a 1099 to them. I have one tax little tip. Say you have young kids, and they can't be too young, but let's just say you have a 12-year-old, or say you have a 12-year-old and a 14-year-old. One thing that saves some money, it's not a lot, is basically, and we'll get down here, it would be under contract labor, line 11, pay them $599 because you're saving roughly 30% in tax on that. That's $180 if you have two. So, or your spouse, now they have to do something. I mean, whether it's helping clean the studio or, providing advice, welcome. Yeah, so that's just a little bit of tax tip there. Or I don't know, anybody has grandkids, but, if they live in town, employ them up to $600. Can I? Oh, she's got it. Okay. So we've kind of covered what's an obvious line 1, gross receipts. And in your profession, I don't believe there would ever be any what's called cost of goods sold, unless you all are kind of a dealer in sheet music, but probably that's not. So basically, line 1 on this handout would be the only line you would, in terms of income, you would do. Let's get into the fun part, the expenses. And line 9, probably you don't do a lot of advertising. Well, business cards would fall under that if you do business cards. But line 9 is really important. If you are an itinerant teacher, someone, in other words, going from school or home, those miles add up. One other thing to include in line 9, if you're going, let's say you're going to Lane's or Bill Jones or what, those miles count. Let's say, and I need to do better about these handouts. Let's say you go to the store to get treats or bribes for your students. For that mileage, it really can be a pretty significant savings on that. And the IRS recently changed the cents per mile. It's up to, I noticed, I believe 67. So that really adds up. Yes, sir.
So, let's say you think back over the year and you think, okay, I went to KMTA meetings 5 times and it's about so many miles there and back, and you sort of reconstructed and estimated, but you don't have a day-by-day log. You get in trouble then with the IRS if you don't have the day-by-day log, or can you construct a reasonable reconstruction estimate?
Well, I will tell you the preferred thing, and it's in the IRS language, is contemporaneous. But that's okay, because if you can go back and you know, have your calendar, if you can go back, reconstruct it. Now, one other thing that I would suggest is, you typically would just use one vehicle, I would think, in your profession. New Year's Day, go out and record the odometer. The IRS likes that. I know that's probably not number one on your agenda for New Year's Day, especially if you've had a big New Year's Eve, but it's great. Just, or if it's within a day or two of January 1, go out and record your vehicle odometer. Obviously, the next year, because in the schedule, they'll want a breakdown between personal and business miles. So that's also important. If you don't think to do that on January 1, if you go get your oil changed, you know, they always record that. So but in answer to your question, you can reconstruct.
I've got one more question about expenses and advertising. Would like paying for a website and a domain fall under that as well?
Indeed. Yeah. Great question. All right, Chris gets the first treat.
Yeah.
And I'm not gonna look whether you choose healthy or not healthy. Or you can get one of each.
Oh, no, this is good. Thank you. One more for everybody else. I think David.
Oh,
that's
and, yeah,
awesome.
and he gets, I'll pass that back. Help yourself. I don't want to get stuck with those treats.
Granola, so granola bars are healthy.
Yeah, it does have chocolate chips in it, but. All right, we did talk, and I think number 10 on commissions, I can't imagine that being a relevant item to this group. We talked about, you know, paying kids or grandkids that up to $600 for line 11. And line 12 is more related to like oil and gas industry, but line 13 is important. So what that, yes, sir.
I just said, if you do try that line 11 and pay your children $599,
Yes.
would that mean you might be more likely to be audited? You
No.
might say, let's see if he really did that.
No, I really don't think
So
so.
it's at 600 where you have to file the form, so 599 would be.
1099 for the NEC, yeah.
Oh, so that's for the person who paid, that's where you have to file that form
Exactly.
to avoid that.
Exactly.
And you can pay your husband for cleaning the studio.
Yes. Yes.
He doesn't know that. I'm not gonna tell him.
Yeah. Oh, well, here.
Does a lot of
Okay,
office
good.
work for me.
So you got a good tax tip.
I'll go with the organic.
Nice.
Thank you.
All right.
Yeah, excuse me,
Um,
I do have a question.
Oh, sure.
The kids has to be above certain age, right? Because I know a case, they hire their own children to do something, it's underage, they got penalty.
Exactly. They have to be, so I would say, and this is just a rule of thumb, I would say at least middle school, you know, where they can do cleaning or sorting of sheet music. I agree. Yeah, you can't be a 2-year-old or someone in kindergarten.
Yeah, I don't know, because to me, I see that person, they hire their both son and daughter, like teenager, not 17 or 18, that's it, earlier, they got trouble for
Really?
their business.
Well, did they issue, you may not know
Because
this.
maybe that's more like a government project, they do kind of science or whatever, it's not teaching related, it's not private. So they got a fund to support their company doing research, so they hire their kids to do some of the things.
Yeah.
So, and then they got trouble.
Yeah.
Was it over $600?
I don't know the details, I just
Yeah.
want to
That's
confirm the
probably-
age, the proper age for that.
That's probably it. They should have issued a 1099. There's not big penalties for omitting those, but that's probably it. She asked a question, so all right. Depreciation. So that can be a big number. Let's say you buy a new piano for your studio. And I know there's a broad range of prices, but let's just say you got one for $20,000. Typically, there's several tax treatments for that. But if you're going to be teaching for several years, what I would suggest is to depreciate it over kind of the standard, I'm going to say 7 years. So even though you have to pay, $20,000 for the new piano, I would suggest. Now, one other thing, let's say you had an old one and you sell it. So that does trigger a different schedule. It's Schedule D, and I'll go through a quick example. So let's say your old piano was sold for $10,000 and you had depreciated it over 5 years. So let's just, so basically your basis is the cost of the piano minus however many years so let's say you've taken $2,000 per year on depreciation for 5 years. So basically, even though, it's now down to zero. So you do have to claim a capital gain in that case. Good news there, if it's over 1 year, your maximum capital gain tax rate is 15%. So, yeah. Now, if you trade it in, then that's different. So let's say you're buying a new piano for 20, the trade-in is 10. So basically, you're not reporting a capital gain because your new piano the basis is 10. I know that's, yeah. And then you depreciate that. So, yeah, it's, yeah, no free lunch. Well, let's go on down. I'm thinking lines 14 and 15.
Sorry, I didn't quite understand what you said about depreciating, like, say it in 7 years. What did you?
Yeah, so that's basically an IRS schedule. So typically, things used in a business are 7 years. So in other words, if you paid, let's do the easy math, 21,000, then each year you would take 3,000 of depreciation.
Oh, wow.
Something else, Jasara, that let's say you have a studio and there's some furniture in there. So now, it has to be a significant piece, but let's say you get furniture, again, it has to be in the studio. You can depreciate that too. Yes, sir.
Maybe this, I don't know if this is getting ahead of you, but speaking of depreciation, well, I've never really understood very much what that is anyway, but with my TurboTax thing, it says since where I teach is 6.7% of the whole house, then it wanted the price of the house, and so I think the 6.7%, somehow it deducts like $400 a year as it's depreciating over, I guess, 30 years or something. So if that house was ever sold, does that mess up things then? Like that the IRS allowed part of that to be deducted?
Well, that's the next form. Form 80. Yes,
So
that's a
it's
great
in
question.
there.
Yeah, I will
Because I
go
heard
over
somebody
that.
say, oh, don't depreciate because it messes you up later or something.
Yeah, no, that's on your home office or home studio. That's the next one.
You'll tell about that later.
I will.
I just have a question, talking about depreciation. Is there a specific number? For instance, if I wanted to buy a new rug, can you depreciate the rug if it's a $5,000 rug? I wouldn't buy a $5,000 rug, but I'm just looking, is there a number when you talk about furniture? I mean, you wouldn't appreciate a side chair, for instance.
Exactly. So that is a materiality question, and I would say anything under 1,000, 500 to 1,000 expense. And so in that case, that expense, if it's a side chair, that would go under line 18 office expense.
Okay,
Yeah.
so.
But if it's 1,000 or
At
more,
what point do you start depreciating something?
Hmm?
Of course, with a piano, you would.
Yeah.
Because that's a major expense.
oh yeah.
But is there a number where you
Mhm.
would start depreciating something?
Materiality is basically your call, but my suggestion is over 1,000.
Okay.
If it's over 1,000, start depreciating.
Mm-hmm.
A couple of years ago, I bought a keyboard for 3,500, I think it was,
Mhm.
and I was wanting to count the whole thing off that year, but then I was worried, oh no, they're gonna make me spread it out over 7 years, but then when I was going through the program, it said, oh, there's a special thing now, you can take this whole thing now this year if you want. So I didn't depreciate it, I took the whole 3,500 that year.
And that's called special allowance. So you can do that. But you got to think about it. Excellent question. You've got to think about how long you want to be in your practice. So if you're planning to teach another 5 to 7 years, I would, and that keyboard is going to last, I'm hoping 5 to 7 years. I wouldn't recommend that, but know your tax software is exactly right. Yeah. So it's up to you. Yeah.
What about computer and new expensive cell phone? Is there a depreciation on that?
So again, it goes back to her question. Most computers are right at that $1,000 range.
Oh,
Yeah.
okay.
Yeah.
Is it better to depreciate it or just use it as a one-time expense?
There is the time value of money in that question. And back when interest rates were like zero, well, not zero, but 3%, I would say it wasn't as important. Now, interest rates are a little more. So that's a consideration to go ahead. Like the computer, say it's $1,200. I would probably choose the special allowance that he was talking about. Yeah. It doesn't have to be new. That's the other thing. Yeah. It doesn't have to be new equipment.
So you're saying it would be better to take it just as a special allowance rather than depreciate it over 5, 7 years?
Again, that generally, what is the saying? A bird in the hand is worth two in the bush.
Yes.
So
okay.
that might
it's a
be a good
personal-
strat. It's a personal thing, yeah. So, but if you're planning on teaching a few more years, then think about how you spread out your deductions. Yeah, personal
Okay,
question.
thank you.
Is there just a standard deduction that we
I'm
can
falling
take?
behind on my job.
Oh, thank you. Is there a standard deduction that we can take
Oh, I've got mine.
and just
Okay.
not
You do more.
keep all these records, or is there a standard deduction allowed right now? There's a standard, yeah.
So you're talking about Schedule A,
Okay,
itemized deductions. So the answer to your question is no.
okay,
Yeah,
Okay.
you gotta pinpoint your expenses.
okay.
Sorry. And then line 17. So, if you do engage a CPA, that I would, suggest that fee go on line 17. Let's see. And then the other, obviously, thing that would apply to you all would be line 22, supplies. So that would be treats, you know, if you all buy furnish the sheet music, the big, I don't know if anyone here travels to festivals out of state or, yeah, yeah. So that's line 24, A. And by all means, get a receipt for that. Yeah, and or if you're taking other teachers out for lunch or what, you know, get a receipt. Just that's kind of a hot topic. Yeah.
So if after KTA meeting, several of the teachers go out to lunch and talk about piano, discuss piano and what was said in the meeting, that's tax deductible?
I would think so, but what you need to do is to just, you know, obviously you'll get the date of your lunch and just put, let's say, Faye Adams or, you know, Chris, lunch for KPMA or
KMTA.
KP.
Okay, okay.
Yes, so I like how you think, yeah.
Oh, honey, I'll get every deduction.
Oh, yeah, yeah,
Thank you.
yeah. Oh, yes.
I have a question. I put the depreciation of the pianos, something like that, and furniture as is.
Yes.
I should provide a receipt when I purchase.
Oh, and so, yeah, so say this year, say in 2020, or say in 2023, you bought a new piano or.
I was talking about 10 years old piano.
But it doesn't have to be new. So if you bought a 10-year-old piano in 2023, that counts.
No, she's saying like she bought it in 2013.
Oh.
Can you
okay.
still put depreciation that piano or no?
I've never done it,
Oh.
depreciation. So.
Then you have to mend it, that's too complicated.
Yeah.
Yeah.
Really about to go back to religious.
Yeah.
So I mean, so she can't put depreciation on a piano that's 10 years old.
Right. So when you start depreciation, there's a question that says, when was it put into service? Yeah. So.
Tuning piano.
Oh, and we're going to get to that. Yes, indeed. And that, what I do, that's actually down there on 27, okay? Piano tuning. Yes, indeed.
Is a check sufficient as a receipt for payment?
Sure. Yeah. I'm trying, 120. Well, let's go down to, hers was a good segue. Let's go down to other expenses. I don't think 27B, energy efficient commercial buildings, what? I don't know, what? Versus, but that's another entity that owns that building, I think. So let's go back to other expenses. Totally fine to take a portion, and the watchword there is portion, of your two things, cell phone and internet service. That may be bundled, but let's just say you're paying $100 a month, and a lot of your cell phone is based on your students. That's fine. But I don't think the IRS would frown if you took 100%. But I think a safe harbor would probably be 50%. You know. And same is true with internet. Yeah, so that helps. I do want to have time to go over the home office or home studio. Oh, anything else on this Schedule C before we leave it? And I do have a card that I can pass out if y'all have questions once you think about things.
You mentioned if you're selling music back to the students. So I think I do what a lot of teachers do, charge like a materials fee at the
Mhm.
beginning of the year,
Mhm.
like $75 a year.
Yeah.
And then I will buy music for them, and then I will sell it back to them,
Right.
and it just comes out of their materials fee. Just keep a record of it. So, is there anything wrong with that? Does that mess up the IRS? And what I would do is I would not count the materials fee as income, but I would just take the difference in what I got for materials fee and what I gave to the students. And whatever was left over would be like extra music that I had bought that I had not sold to them. That would be counted as cost of supplies, correct?
I'll tell you how I would do it. Because you're a cash basis taxpayer. So what you're referring to is you accumulated a year-end inventory of sheet
Yes.
music.
Yes.
That's not cash basis.
Ooh,
Yeah, that's okay.
don't tell anybody. Oh, so I've been doing it wrong,
That's
okay.
okay. I don't work for the IRS. So really the most transparent way, and correct way to do it is the $75 fee per student. You do report that on line 1 as income when you receive it, but line 22, I believe that's the one we just went over, supplies. So whatever sheet music you purchase, it goes on line 22. Now, let's say you have leftover inventory. That could go, so we're talking about cost of goods sold now. Unless you want to do that, that's okay. But basically, cost of goods sold means you have your beginning inventory and your ending inventory. Kind of a hassle, in my book. I'm not sure you want to do that.
Well, no. No. I mean, what I've been doing works for me, but apparently it's not correct in the eyes of the IRS. So,
Oh, I am so sorry. That was that's my alarm. It's been 45.
Oh, my
okay.
goodness.
Oh, I'm sorry.
No, that's okay.
We can talk about that some other time.
Yeah. Well, I'll give you my card. This sheet can really save you some money. This is that 8829 form that should be in your package. What I would do is it's based on square footage. So let's say your house is 2,000 square feet and your studio, and I would measure it, is 500 square feet. So basically on all of this list of expenses, you're going to, and the software applies that 25% to these expenses. So let me mention a couple of things that you might overlook. And most of these are pretty self-explanatory. Let's see, obviously, so let's just say line 10, mortgage interest. That's comes straight from the mortgage company every year. And then real estate taxes, a lot of that is from your escrow account. So so you just add that under B. B is indirect expenses. And then another very common one is homeowners insurance. I don't know if anyone does like other umbrella policy, or because you're having people in your home, I would add that on line 18. And then line 20, repairs and maintenance. So let's just say I have one client who had some driveway repairs. Well, your students have to get there. So that count, even though it's not within your house. Another thing would be things like if you have an outside cleaning service, that counts. Yeah. Now again, you've got to get that percentage and apply that to the percentage. KUB is line 21, or I think some parts have, separate water providers, but, and then the rest is basically, now back to your question on house. That's part 3, where it says depreciation of your home. That's actually your choice. We're not talking about much money. So if you're basically a house is gonna, be depreciated over like 39 years. So, and then you multiply that by 25% for your studio square footage. So I'm fine with omitting the house depreciation because you're exactly right. When you go to sell your house, you may have to recognize a capital gain. So
I've been doing it for years, but it's only 6% of my house, not 25.
there you go. And it's probably, a minimal amount on your.
So when I sell the house, there's a capital gain?
Well, it could be, because the way that works is you recognize that 6% as kind of a separate entity on Schedule D. So, but again, think about the capital gain is going to be 15%, whereas the Schedule C is at a higher marginal rate. So you've probably helped yourself.
Can I ask another quick
Sure.
question? I remember years ago, when we had a mortgage, or let's see, with interest, you used to be able to deduct interest in general, and then they've reduced it down to mortgage interest when it comes to Schedule A, itemized deductions, and you could only deduct mortgage interest. But then here in this Schedule C, there's interest for business purposes. So then, when we got a home equity loan, at first I thought, well, we can't deduct any of that. But then later I thought, well, I used part of that to buy that $3,500 keyboard. And so then it occurred to me, well, could I then deduct a portion of the interest I was paying on that loan, whatever portion that $3,500 keyboard was? But then to further complicate it, we had to get a new roof that was like $12,000. And then I thought, well, since my home studio is 6% of the house, would that have meant that 6% of the roof, that the interest I was paying on the roof portion of the loan, then could I take 6% of that because 6% of the house was being used? But then, let's see, what was the other? Well, anyway, it just seemed so complicated, I kind of gave up on that.
Well, it can be, but I would say the low-hanging fruit in that question is the line of credit that you use to purchase your keyboard. The interest, that is.
It wasn't a line of credit, it was a home equity loan, a fixed loan, like a second mortgage.
Same treatment. So let's say you got a $20,000 home equity loan, then all really the IRS needs to see is sort of tracing how that money was spent. So that's pretty easy. So if your keyboard was $3,500 and your loan was $20,000, take that fraction times whatever interest you paid, and that would go on Schedule C.
So any part of the loan that was used for business purposes, I could deduct that percentage of interest.
Exactly. Yeah.
And when you get to line 20, repairs and maintenance, what percentage would you suggest taking as a deduction?
Okay. So that actually is predetermined by your studio square footage.
Oh,
So in the
okay,
example
okay.
that I, started with, 2,000 square foot house,
Mm-hmm.
studio's 500 square feet, so 25% of the overall maintenance, and that could be like gutter cleaning, I mean, it adds up.
Driveway repair?
Yeah.
You would use the same percentage for that? We had our driveway repaired this year.
Hmm.
Didn't even think about doing that.
Yeah.
But most people's studio wouldn't be 25% of their house. And mine's only 6%.
Yes.
What is the difference between utilities on this one and schedules?
Well, that's a really good question. So this utilities line 21 for home office is basically your KUB, your water, something else may not apply to this group. HOA fees, if you're in a condo or homeowners association. Oh, and I did not answer someone's question. Piano tuning goes on Schedule C. I usually do under other 27A for piano tuning. Yeah.
Does it make a difference, money-wise, whether you put it under, 27 or under repairs and maintenance? For piano tuning?
No, not really.
Okay.
Yeah, if you've put it under repairs and maintenance, because it all comes to a total, you're fine.
Okay, good.
Is there any advantage to, the MTNA National Magazine came out with an article about how some of the teachers have been incorporated, and then it was reminded them they had to do something. Is there any advantage to becoming incorporated and then having a whole different tax structure?
Well, I think you're referring to, at least in Tennessee, that's a single member LLC. So it is an LLC, and there's a little bit of, liability protection if you have a student or a parent walk in and fall. But I will say this, just make sure that your regular liability insurance is robust, and because what you're doing in Tennessee anyway is that's opening up, it's not a lot of money, but that's opening up another report to the state.
So it doesn't save on taxes, really.
It actually adds a little bit of taxes. Yeah. Yes, yes.
So that, Schedule C, the utilities, the internet goes there.
Yes, you can do that. Yes, indeed. That's a great question. So you typically get more bang for your buck by doing, and I'm just going to say 50% of your internet on Schedule C and not on this home office schedule. That was a great question.
But if you get incorporated, can you count charitable deductions as a business expense and thereby not have to pay self-employment tax on it?
So,
because if you just count your charitable contributions on Schedule A, you still end up having to pay all of that self-employment tax.
right. Well, it depends. So if you're doing your charitable sort of in the guise of promotion or advertising, that's different. And that would go on line 8 of your Schedule C.
Oh, even if you're not incorporated?
Right. So let's say you choose to sponsor an event here at Lane's. Well, they're moving, but anyway. Then if you're sponsoring it, you're promoting your teaching business. So I would definitely put that on line 8 for advertising.
But what if it's something that doesn't relate to your business? Like, what if you're supporting a child overseas through World Vision or Compassion that doesn't really relate to your business?
Yeah, unfortunately, that doesn't count.
But if you were an incorporated business, then could you say, okay, as a corporation now, we're making contributions, and then we and the corporation wouldn't be paying self-employment tax or something?
Still the same treatment. It wouldn't really count. I mean, you'd have, so when we started this, there's the words ordinary and necessary. the IRS uses. And so in that case, I don't think you could deduct it if you were an LLC.
So these corporations that give money to charitable causes, they still have to pay tax on that? They can't deduct that from what they pay tax on?
They can deduct it if yes, it's kind of, yeah. But I don't think in terms of ordinary and necessary, it would apply to this group. Yeah. I know I've gone over, I apologize.
It's
No,
all
this is
good.
great.
It's been really excellent.
Yeah, and so, oh, and I was just gonna close, there's, I had a little schedule here of common errors and omissions. Back to your question, I mean, a hot topic now are charitable, just, so if it's over 250 to one organization, just be sure you get a receipt for that.
Oh, so charitable donations are back? I mean,
Well, no, so these are not related to Schedule C.
okay.
Yeah, these are itemized, and now that it's a pretty high threshold, almost 14,000 per individual, unless you're super generous or have a huge mortgage, most people don't get itemized deductions. Yeah. And then last thing, and this actually is important to this group, self-employed health insurance. So now if you're covered by your spouse's W-2 employment, this doesn't fly. But if you're purchasing any kind, whether Medigap, long-term care insurance, so that will help reduce your self-employment tax. And there's a line in the software for that.
Does it have to be over 7% of your gross income before you
No.
can start to deduct it?
No, you're right on Schedule A, but this is a little benefit, small benefit of self-employment. So it's, yeah. So just think about if you're, now, if you're covered under your employer, doesn't count. But this is outside of that. If you're drawing Social Security, those Medicare deductions count.
Well, they do.
Yes.
What they deduct for Medicare count?
Mhm. It's called self-employed health insurance.
What if you pay for some sort of, what's it called, Medicare Advantage plan? Wait,
Doesn't matter. Yeah.
so I could go on Schedule C.
No, it's outside of Schedule C. It's when the software will deduct it on, it's actually Schedule 1. There's Schedules 1, 2, and 3. And so it actually is deducted on Schedule 1. But you report it as an ancillary thing on Schedule C. There should be a question if you're doing the software. And that helps. Yeah.
What's it called again?
Self-employed health insurance. Oh, and one thing Congress did do that was a little beneficial, if you're a totally not self-employed but a W-2 and you are a teacher, they've upped that from $250 to $300. It's on that Schedule 1 for expenses. So that, that's but again, those are for W-2 type teachers. I'll be happy to hang out, but I know we've gone over.
It's been great.
Yes.
Thank you so much.
You're welcome. Now, I'm gonna go in the back because you all need to partake.
Yes.
It's sort of like, I live on a dead end, so I don't get many trick-or-treaters. So I don't want to be stuck with this. This is actually Valentine's week.
Yep.
So, yeah.
Thank you.
I'll grab another one of the granola bars. Thank you so much.
Oh, yeah. Thank you for. You want to take one for Mark?
No.
Okay, y'all. Well, thanks.
I will.
Thanks everyone for being here. I guess we'll do
You
a
will.
little quick business meeting unless anybody else has any other questions. Does anybody else have any questions? Let's have another round of applause. Thank you so much. This was such a great presentation.
Oh, yeah, I'll get it.